For most people, tiredness is not a sleep problem. It's an energy production problem. And those are two completely different things. Wait 90 minutes after waking up before your first caffeinated coffee. Your adrenal system will thank you.
WhatsApp the word sleep to 072 702 1702 and we'll send you the link to watch the full video on Prime Media Plus.
Well, Absa reporting today its headline earnings up by 8%, dividend up by 8% as well. This is for the 6 months to the end of June. South African operations seem to be flying. Their earnings up 17%. Operations across Africa, though, seeing their earnings drop by 10%. Well, the group CEO at Absa is Kenny Fihla. Kenny, good evening. Welcome back to the Money Show. I really appreciate the time. Your personal and private banking division increased their headline earnings by 12%. It's a big jump, had a big impact on you. What do you think is working for you there at the moment?
Well, good evening, Stephen. I think there are a number of things that are happening in that business. Firstly, there's a growth in customer numbers, both in South Africa as well as in Africa regions. I think secondly, the region has improved on its risk quality. One of the undermining factors in the past has been the credit impairments. That seems to have stabilized as within the quality and start to focus on clients whom we've got a primary relationship with. The third factor is the rate of converting clients from manual processes into digital channel, which are far more efficient, easier to cross-sell to the client base, and I think the momentum is there. Clearly, there's a lot that we need to do, but we're pleased with the momentum within our personal and private banking business.
Your corporate and investment banking division, I mean, that was up just 1%. Is there a problem there? Is it just a general economic story?
I think it's largely two factors. The South African business did exceptionally well, was 13% up, which is pleasing, at the back of a stronger deal origination. Unfortunately, in the Africa regions, there are two factors that affected that business, which was 12% down, resulting, therefore, overall in the CIB business being only 1% up. The first is the interest rate reductions in Ghana and Kenya. Our business has a huge deposit base in the corporate and institutional space. With massive reduction in interest rate, it loses on the interest income at the back of lazy deposits. The second factor is the less volatility that has been experienced in the first half of the year, largely because of the onset of the Middle East war, which has resulted in clients being far more risk averse and not really wanting to manage and hedge their positions. We are confident, though, that the trend is starting to pick up. However, the interest rate headwinds will remain with us for the remainder of the year. But we have a solid base upon which we can build in 2027.
Your operating expenses, they were up 5%, and you say that's because of continued investment in digital capabilities, as you talk about. I know that obviously AI is going to play a big role in banking in all sorts of ways. Your competitors are talking about this. Are you comfortable that Absa is keeping up with other banks in this? I think there must be a lot of investment in AI and digital technology right now.
Yeah, our costs were up 4%. Largely driven by two factors. Natural inflation increases on our staff base, but the other operating expenses were only up 3%. We also had to invest in strengthening our capability, both in terms of just strengthening the leadership band strength, but secondly, investing in data, AI, and accelerating the pace of digitalization. I am comfortable that the level of investment and the progress that we are making is on par and in some instances slightly ahead of our competitors. But we need to make sure that we spend on the right things and that ultimately those things result in meaningful client experience and can unlock our ability to roll out new solutions to our client base.
In your documents, you refer to the higher levels of fraud in South Africa, and that's one of the reasons that your operating expenses increased a little. I mean, it's such a big problem for everyone. Do you see more intense efforts by people to try and steal, from you and your customers? You have to spend a lot more money guarding against that now?
Absolutely. I think fraud overall has increased quite significantly in the last couple of years. And we're seeing criminals also adapt AI and becoming far more sophisticated than they used to be in the past. And unfortunately, they target vulnerable segments of our client base, and we had to step up security. We had to continue to make it difficult for them to break into clients' accounts, for them to access client PINs as well as ID logins. But at the same time, we are also sympathetic to clients, especially the vulnerable sections of our client base, older sort of people, where we reimburse them even if the fault was not really on the part of the bank, because we understand the difficult circumstances that they are confronted with, whilst tightening education and ensuring that we can continue to implement new measures to make it difficult for them to be defrauded. I think this is an industry-wide problem, but we have seen some sort of a reduction in the number of fraud cases in the last 2 months or so, and we'll continue to enhance and put new measures to make sure that we can reduce that to the absolute minimum without putting too much pain on the clients, because the more we tighten, the more we put new measures, the more difficult it is for clients to transact easily.
You spoke about strengthening the leadership band. You have quite a lot of newish talent in some of your leadership positions. How long do you think it's going to take before they're all firing on all cylinders, before you start to see real changes? I'm sure you see some already. Some it will depend on when people were appointed. But are you expecting to see real changes quite soon?
The expectation is that we will start to see some green shoots coming through the business. And I think there are early signs that things are moving in the right direction. I think the big issue that ought to be attended to is to accelerate the shift in the culture of the organization. We have excellent people, amazing clients, great solutions, but unfortunately, some of the repeated leadership changes of the past have resulted in the culture within the organization being too internally focused. So we're shifting that to be customer focused, to be outcome based, as well as to be driven by a sense of confidence and characterized by excellence. There are early indications that our turnaround times are reducing. We're getting feedback from the clients that there's far more greater interaction and solutions being presented to them by the Absa team. We just have to continue to do the right thing continuously on an ongoing basis over a long period of time for us to be comfortable that the culture shift is now truly embedded. Clearly, in an organization that has 36,000 people, you can't turn the culture around overnight, but I think the direction of travel is positive. 2027, I think, will be a telling year. This is a transition year. Whilst we still need to maintain delivery on the financial performance, I think 2027 will be a year where we'll be expecting a step up, given that the new leaders would have settled for quite some time.
Kenny Fihla, I really appreciate the time. Thank you very much indeed. The Group CEO at Absa.